Hi everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 19th of March 2021. A pullback or consolidation has begun and I am expecting it will most likely continue for several weeks. The first area for support is 54.86. If price gets down there and either the Elliott Wave structure is incomplete or price keeps falling, then the next area for support is about 46.76. Let's have a look at the Elliott Wave analysis first and classic analysis last. From this high to this low, this is the high in end of 2008 and the low January 2020. This structure will not subdivide as a 5-wave motive structure. It will only fit as an Elliott Wave corrective structure, and it has an absolutely perfect fit as a double zigzag. What that means is, if this is a double zigzag, it's extremely likely to be over here. There's almost no room for a triple zigzag to continue lower, and triple zigzags are not very common structures. It also means that this can't be a continuing 5-wave motive structure continuing lower. It just won't fit. And so I'm going to label this supercycle wave 2, which means here's the end of wave 1, wave 2, and the start of wave 3. Wave 3 has to move beyond the end of 1, and it has to move far enough above this to allow room for a subsequent supercycle degree 4th wave to unfold and remain above first wave price territory. What that means is, once this price point is breached and then we have a back test of support and price moves on up, I will not expect to see prices move back below this point for many years. We're not there yet. We still haven't got to breaching the end of supercycle 1. Supercycle 3 may only subdivide as an impulse, so it has to meet all of those core Elliott Wave rules for that structure. Cycle 1 and 2 could be over here. 3, 4, 5. 2 can't move beyond the start of 1. 3 has to move beyond the end of 1. 4 may not overlap into 1 price territory, and 3 may not be the shortest. Let's take a look at the first weekly chart, which will follow this labelling from this low here, this point back down here. This first weekly chart sees cycle waves 1 and 2 potentially over here. I have another weekly chart where I'm moving the degree of labelling down. Within cycle 3, I would expect only primary wave 1 may be over here, and this wave count expects cycle 3 may be a long extension. The target is for it to reach 2.618, the length of cycle 1, considering how high the supercycle degree 3rd wave, that's 1 degree higher, has to move. The pullback I expect that's begun with a bit of strength this week is primary wave 2. This is exactly what was expected. It may not move beyond the start of primary 1. For this wave count, the invalidation point is 33.65. Let's take a look at the daily chart. From this low to this high, we're going to look at the structure of primary 1. This low to this high, it subdivides as an impulse, 1, 2, a very long extended 3rd wave, 4th wave, and a short 5th wave, which overshoots the upper edge of this best fit channel. That's a really typical look for oil, for all commodities actually. And so I expect primary wave 1 may be over here, and primary 2 may be continuing lower. 2 targets for primary 2, the 0.382 and 0.618 Fibonacci ratios. Use the 0.382 Fibonacci ratio first. If price gets down here and the structure of primary 2 may be complete and it looks like it's lasted long enough, then it may be over. But if price gets down to this point and either just keeps on falling, or the structure is incomplete, or it's just too brief, then we'll expect the next area of support to be the 0.618 Fibonacci ratio. Primary wave 2 may subdivide as any one of more than several corrective structures. It can't be a triangle, but that only eliminates a few. It can be either a zigzag, multiple zigzag, flat, multiple flat, or a combination, which leaves quite a few different options. It's most likely to be a zigzag, so that's how I'll label it for now, but that's not certain, and it's impossible to tell at an early stage what corrective structure a correction is going to take. And so labelling of primary 2 is probably going to change, and as it unfolds further, I'll probably start to have alternate wave counts for different possible structures for it. It may not move beyond the start of primary 1 below the invalidation point. When it's complete, this wave count then expects a 3rd wave up at primary, cycle and super cycle degree. That should be an absolutely explosive upward movement for this particular wave count. But we also have this alternate. If I just move the degree of labelling within this down 1 degree, this could be primary waves 1 and 2 complete. Primary 3 could have been over here, and this pullback could be primary wave 4. It's now that the 2 weekly charts start to diverge somewhat. This wave count sees primary wave 3 is actually a little bit longer than primary wave 1. They're fairly close to even in length, but primary 3 is slightly longer. Primary 3 may not be the shortest actionary wave. That's waves 1, 3 and 5 within an impulse. The third wave may not be the shortest. Sometimes that's misinterpreted to say it has to be the longest. That's absolutely not what it means at all. And for commodities, it's actually pretty common for their fifth waves to extend. So this is an entirely valid wave count. It has about an even probability with the first weekly chart, in my judgment. And so if cycle 1 is not over, it could have primary 1, 2, 3 and now 4 and then 5 to unfold. 4 may not move into wave 1 price territory. If this wave count is invalidated, we're going to start to have some more confidence in how the structure is unfolding. So let's take a look at this at the daily chart level. Actually, no, I don't think I had. No, I don't. I'm going to go back. If you look at it at the daily chart level, instead of primary wave 1, you'd have primary wave 3, and the invalidation point would be slightly different. It would be higher. The structure would be the same. All of the subdivisions would look exactly the same as this. Now, the only other difference apart from the invalidation point between the two wave counts now is a possible structure for this correction. For this wave count, it could also be a triangle, and so if a triangle unfolds, we're going to know that it's a fourth wave, because a triangle may not be the sole corrective structure in a second wave position. Okay, let's have a look at classic technical analysis this week now. At the weekly chart, we now have a nice bearish candlestick pattern, an evening star pattern. The third candlestick for the downward movement does not have support from volume. That's okay. Downward movement doesn't have to have support from volume. Price can fall of its own weight. Another way of saying that is price can fall for quite a considerable distance without support or push from volume pushing price lower. For a bullish move, volume is required for a sustainable upward trend. It requires the activity of buyers to push price higher, but you don't need sellers to be active to push price lower. The absence of buyers can push or see price fall quite quickly. So that's why we say price can fall of its own weight. I know it's a bit of a confusing shorthand. And so lighter volume this week is not a concern for the bearish case, but the evening candlestick pattern does support a bearish Elliott wave count, at least for the short term. It should be fairly strong support, about 43. ADX still slightly increasing this week at the weekly chart level, indicating an upward trend. The ADX line is now above both DX lines, so at this time frame, the upward trend is now extreme, just. ATR showing a little increase as price moved up to the final high. That's pretty typical for the end of a movement for this market, and now showing a further increase a little as price starts to fall. The last signal on balance volume gave at the weekly chart level was a bullish signal. It's come back down to test support, but this support is very weak. If it breaks below this, I wouldn't read that as a bearish signal. I would redraw this trend line for better technical significance. But if it bounces up from here, that would be a bullish signal. So let's see how that one unfolds next week. RSI has now been brought down from overbought back into neutral territory. Stochastics remains overbought. At the daily chart level, this upward trend reached very extreme, and RSI reached into overbought and then exhibited double bearish divergence with price. In those extreme conditions, with that bearish divergence, we give weight to this dark cloud cover bearish candlestick pattern, and we expect a consolidation or a pullback at least to relieve extreme conditions, or potentially a 180-degree trend change. The Elliott Wave count expect that this is going to be a multi-week to multi-month consolidation or pullback. This is Thursday's downward session, This has got a huge push from volume pushing price lower, but after a strong downward day, I would expect some reaction, and Friday did see a green candlestick, not shown on this chart. Also with this bullish long lower wick for Thursday, some reaction upward before this pullback continues would be a reasonable expectation. Support noted on this daily chart. ADX is declining after reaching very extreme, telling us the previous upward trend may have ended. The negative DX line now crosses above the positive, telling us further that a potential trend change to down at this daily chart time frame may have occurred. ATR showing a further increase as price falls, that's bearish. On balance volume at the daily chart level gives us a bearish signal this week. This trend line's fairly long held and it's horizontal, but it's only got, well, if you count these two as well, possibly 4 tests of support. It's breached, so we're going to add that to the weight of bearishness supporting the Elliott Wave counts. RSI is in neutral territory, still room for price to fall before it reaches oversold. Likewise, stochastics, room for price to fall before that too reaches oversold. And MACD bearish, but not yet fully so. That's all from me with your oil analysis this week. I hope all of our members are having an awesome weekend.